At the end of last week, market was in a free fall and it felt like the world was falling apart. This week, market is up a bit, but it's still pretty bad out there. Let's take a look at how the leverage ETFs did in last few days. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and all things finance. If you've been following this channel, you know I use M1 Finance to manage my long-term portfolio. It is a mix of leverage ETFs and individual stock names. Today, I want to focus on leverage ETFs only. I did a separate video on stocks to consider given the recent dip. Link will be on the screen. In this video, I want to take a closer look at leveraged ETFs and how they have performed in the last few days. These make 35% of my portfolio, so you can tell I'm pretty passionate about them. We'll talk about performance and what I'm doing next given the recent dip in their value. Before we move forward, a bit of a recap from my other video. I think if you're not investing in these leverage ETFs as part of your long-term portfolio, you're missing out. That has been my position before this crazy sell-off happened. Link will be on the screen if you want to watch that video. Here is a quick summary. If you invested in these ETFs right at the inception, leverage ETFs gave you 40% annual return year over year. The key to managing these ETFs is to buy major dips like we are having right now. So has my position changed given the recent sell-off? Short answer, no. Indeed, there has never been a better time than right now to start accumulating these. Let me explain. Here is a chart comparing TQQQ and QQQ. The index peaked February 19th at 236. TQQQ, the leverage ETF that tracks the index, closed at 118. QQQ made a low on March 23rd at 170 before it bounced back a bit this week. That is a 28% drop from the peak. TQQQ gave back 70% during the same period, a lot less than 3x. TQQ did exactly what it was supposed to do, destroy your portfolio. Here is a chart comparing UPRO and SPX. SPX dropped 34% since February 19th, while UPRO dropped 77%. Again, way less than 3x. Now let's compare the performance in the last 3 days where the market popped a bit. This is as of Thursday, March 26th. To keep things simple, I'm going to ignore yesterday's drop in the market. QQQ in that period popped 13%, while TQQQ raced to 39%. That is a perfect 3x move. While UPRO moved 56%, a bit more than 3x. Where am I going with this? Leverage ETFs do what they're designed to do, amplify gains and losses. These moves should not surprise you. As you saw in the comparison, they pretty much are tracking the underlying index 3 times or 3x. It's important to understand actual dollar impact as well. Let me demonstrate using an example. Let's say you invested $100 in QQQ and TQQQ, and market moved down 5% and next day it moved up 5%. You will end up losing more money investing in TQQQ versus QQQ. This is not magic, it's just math and how percentages work. If you can't deal with massive moves in leverage ETFs, you should not be investing in these. So how am I dealing with these ETFs? Last year, I started my portfolio on M1 Finance, and here is how I allocated my money. 35% in leverage ETFs, 50% in high-yield dividend-paying ETNs, and remaining 15% in individual stock names. Things have changed a bit due to the recent drop in the market. Here is how. ETNs are gone since they have dropped so much they are at risk of getting redeemed prematurely. In simple terms, they may no longer be available for investing. This has been such a safe bet over the years with consistent dividend. I'll continue watching these and maybe reinvest once the risk subsides. UDOV is a new addition. It is a 3x leverage ETF that tracks Dow Jones. Finally, I'm raising my stake in individual stock names since most of these have been beaten down big. With that, I'm 50% in leverage ETFs and 50% in stocks. The best way to manage leverage ETFs is to buy more when they drop big, and this is exactly what I'm doing. I have been accumulating. I did buy a decent chunk when the market dropped 4,000 points. I'm expecting the market to stay around the low or maybe even go lower over the next several months. I will be buying a little bit every month for the next several months in addition to my monthly contribution. This is going to bring my dollar cost average down, and when markets turn around, it will work in my favor. Click on the link if you want to learn more about how I'm planning to invest in the next 15 months. Okay, that is how I am dealing with the recent dip in the ETFs. Let me know how you're managing your investments. Curious to know if you have any positions in leverage ETFs. Thanks for watching. If this was helpful, hit that like button, and if money gets you high, consider subscribing. Until next time, peace and stay safe.